Good morning, distinguished guests, ladies and gentlemen. The 18th Bulletin of Monetary Economics and Banking, BMEB, International Conference and Call for Papers 2024 will be begin shortly. For participants who join us here in Grand Ballroom Fairmont Hotel Jakarta, please be seated. We would like to inform you, please switch your mobile phone to the silent. Thank you. Ladies and gentlemen, please welcome Governor of Bank Indonesia, Dr. Peri Warjio. The national anthem, Indonesia Raya. Ladies and gentlemen, please be seated. Kiprah Bank Indonesia sungguh menawan. Berabad menjadi penyangga ekonomi dunia. Dear participant, ladies and gentlemen, welcome to the 18th Bulletin Monetary Economics and Banking International Conference Call for Papers 2024 hosted by Bank Indonesia. The Honorable Governor of Bank Indonesia, Dr. Peri Warjio, Head of Bank Indonesia Institute, Dr. Yoga Afandi, Distinguished Speaker and Moderator, Dr. Albert Park, Professor Ahmad Faruk Aisan, Bapak Budi Ganda Subrata, and Professor Paris Narayan. Esteemed guests, ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh. Shalom, Om Swastiastu, Namo Buddhaya, may peace be upon you. My name is Daniar Akhri. On behalf of the committee, with the warmest regard, we would like to welcome you to the 18th Bulletin of Monetary Economics and Banking BMEB International Conference and Call for Papers 2024 Policy Innovation in a Turbulent World, Embracing Digitalization and Artificial Intelligence Amid Global Uncertainty, hosted by Bank Indonesia. Ladies and gentlemen, today's event is particularly special as it is part of one of the biggest signature annual event organized by Bank Indonesia. The event includes BMEB, then JIMF, and FECDI KKI. And FECDI KKI will take place at the Jakarta Convention Center from 1st until 4th August 2024. Distinguished guests, ladies and gentlemen, this annual international conference and call for papers is also very important part of Bank Indonesia Institute initiative to develop research ecosystem in Indonesia which over the year has attracted more quality papers from prominent domestic and international researchers. And now, to start this event, we would like to invite to see briefly the BMEB manifesto. Please enjoy watching.
The Bulletin of Monetary Economics and Banking, or BMEB, is an international journal of Bank Indonesia that discusses monetary economics, banking, macroprudential, and payment systems. BMEB is an international journal that publishes high-quality research that contributes to the literature and/or has a broad impact on policy making. Its vision is to become the main reference for policymakers, academics, and practitioners. BMEB has carried out continuous transformations so that it can contribute to the development of the research ecosystem and become a reference journal. The spirit of transformation has shown results. BMEB has succeeded in strengthening its position as an international journal Scopus Index. The transformation in journal management begins with the dedication of the BMEB editorial boards, who have set forth a strategic plan for the journal's midterm evolution. Starting with improving the infrastructure of the journal, this includes improving the quality of the journal's website, its contents, and the transparency of the editing process. Management of journal editorial processes is done using digital commons, the best journal platform widely used by prestigious journal publishers. Strategically, BMEB has fortified its partnerships with Asia Pacific Applied Economics Association and Asian Development Bank Institute. Collaborations with top Indonesian universities further ensure a rigorous review process and elevate the quality of submissions from local authors. The goal is also to diversify the geographical representation in the submissions. Increased international exposure and visibility through attending and organizing sessions at the Financial Management Association Conference, American Economics Association Conference in the US, Western Economics Association International, and Southern Economic Association. Organizing joint calls for papers and co-editing with Scopus Index partner journals at the BMEB Annual International Conference and calls for papers. Going forward, we will continue to develop BMEB as a reference journal for central bank policies, economics, and finance, serving both emerging and developed countries worldwide.
Distinguished guests, ladies and gentlemen, to begin today's conference, may we now invite Head of Bank Indonesia Institute, Dr. Yoga Afandi, to deliver a committee report. Bapak Yoga, the stage is yours.
Honorable Governor of Bank Indonesia, Dr. Peri Warjio, Professor Pares Narayan, President of Asia Pacific Applied Economic Association, distinguished plenary speakers, Dr. Albert Park, Professor Ahmed Farud Aisen, and Mr. Budi Ganda Subrata, paper authors, paper discussants from APAYA, and respected international conference participants, honored guests from related institutions and universities, all committee members and parties with whom we have collaborated to have this event. Ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh. Peace be upon you, good morning and welcome to Jakarta. First of all, let us extend our praise and gratitude to Allah, the Almighty God. It is only with His blessings and permissions that we can all congregate here to have our partaking in the 18th International Conference and Call for Paper for the Bulletin of Monetary Economics and Banking, BMEB. The title of this year's conference is Policy Innovation in a Turbulent World, Embracing Digitalization and Artificial Intelligence Amid Global Uncertainty. The event is synergy to strengthen digital economy and finance and inclusivity for sustainable growth. This reflects Bank Indonesia's commitment to working together with the government, relevant authorities, and the industry to promote an inclusive digital economy and finance for sustainable growth. We are honored by the presence and invaluable support of the Bank Indonesia Governor and also the board members. Their support has significantly strengthened the ecosystem of our economic research, not only in Bank Indonesia, but also throughout Indonesia. Lastly, we extend our sincere appreciation to all the distinguished scholars and dignitaries for their enthusiastic participation in making our event a success. We are grateful for the time and effort you have dedicated. Distinguished guests and conference participants, with the conference theme of Policy Innovation in a Turbulent World, Embracing Digitalization and Artificial Intelligence Amid Global Uncertainty, we have accordingly issued a call for papers on topics included, but not limited to, the challenges and risks of using artificial intelligence for policymaking, the development and deployment of AI-powered policy tools and applications, the impact of global trends and uncertainty on policy-making process, the innovative approaches to policy design, implementation, and evaluation to face global uncertainty, the potential digital technologies to enhance policy transparency, accountability, and efficiency. As a result, the call for BMEB paper received positive responses from researchers and academics worldwide. The number of papers participating in the call for papers in the last 5 years has averaged 206 papers. This year, there were 179 papers submitted. Of these submissions, 47 papers were domestics, 49% were international, and 4% were collaborations between domestic and foreign researchers. Following a rigorous selection process and double-blind review, 42 papers were selected to take part in today's call for papers, comprising 18 domestics and 24 international papers. The numbers of authors who have participated in producing the papers is 117 authors who come from various countries, namely Indonesia, Malaysia, India, Japan, China, Turkey, Bangladesh, Brunei, South Africa, and Pakistan. Ladies and gentlemen, Bank Indonesia Institute has thoroughly worked to continuously improve the BMEB, achievement that would not have been possible without strong collaboration and synergy with both domestic and international partners. We want to acknowledge the many parties that have collaborated in our relentless efforts to improve the quality of the conference and the BMEB journal. Firstly, I would like to highlight our partnership with the APAYA, the Asia Pacific Applied Economic Association, which has supported us in maintaining the BMEB status as well as a respected Scopus journal since July 2019. The accomplishment was achieved through a strategy focused on enhancing journal ratings via effective branding and citation strategies. Next, Bank Indonesia Institute is strongly committed to enhancing the research ecosystem and academic writing in Indonesia. To achieve this, the Institute continues to expand and strengthen strategic collaboration with both domestic and international partners. Today, I would like to mention our collaboration with, first, we have partnered with Asian Development Bank Institute, ADBI, which serves as the think tank of the Asian Development Bank and specializes in research and capacity building for economic development in Asia-Pacific region. Together with ADBI and APAYA, we have organized several joint workshops. Second, several institutions have assisted us in reviewing the submitted papers, resulting in the selection of 42 papers to be presented in parallel sessions. The collaborating institutions include National Research and Innovation Agency, BRIN, and several public universities across Indonesia, such as Gajah Mada University, Universitas of Indonesia, Airlangga University, IPB University, and Universitas Pajajaran. Additionally, we have continuously established strategic partnership with other Scopus Index journal. Last year, BMEB collaborated with 2 academic journals to organize Call for Papers event. This year, BMEB has once again invited collaboration from Scopus Index journal, specifically Emerging Market Finance and Trade and Studies in Economic and Finance. Ladies and gentlemen, with that, I would like to end my report. Again, on behalf of the Bank Indonesia Institute, I would like to express my sincere appreciation to distinguished speakers, all participants, partners, and my colleagues on the organizing committee for their great efforts in delivering a successful event. Now, allow me to respectfully invite the Governor of Bank Indonesia to deliver a keynote speech and officially open the important conference. Thank you very much. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you, Pak Yoga. Ladies and gentlemen, may we have the honor to invite the Governor of Bank Indonesia and BMEB Editor-in-Chief, Dr. Perry Warjio, to deliver his keynote speech and officially open the conference. Please welcome Dr. Perry Warjio.
Wait a minute, my picture is still on. Very good morning to all of you. Let me just once again welcome all of you to this 18th Bulletin of Monetary, Economic and Banking BME International Conference and Call for Papers. Let me say hello to my members of Editorial Board of Bulletin of Monetary, Economic and Banking, as well as distinguished plenary speakers and moderator. Professor Albert Park from Asian Development Bank, Professor Ahmed Farouk Aisan, my brother from Hamad bin Khalifa University, my also brother, little brother, Budi Ganda Subrata from Go-To Financial, as well as Dr. Pares Narayan, which is also editor-in-chief, as well as today moderator from President of ASEAN Pacific Association of Economists, fellow researcher and scholar from Bank Indonesia, government institution, partner institution, among others, Indonesian Economic Association of Indonesia, which is the chairman, as well as from APAYA, the academic research institution and participant and conference, ladies and gentlemen. Year by year, this conference setting the benchmark. Not only in 2 days what's evolving, but also in the future. Last year, I spoke on this keynote address on the topic that we discussing back then, which is called on synergy and innovation in strengthening resilient and economic growth. We are talking back then about the need of the policy make, not only fiscal and monetary coordination, but also central bank policy make of monetary and macroprudential policy, as well as also on the payment system digitalization. And now those policy make being discussed in the international fora. Even the IMF now developing what they call integrated policy framework, which is basically about coordination of fiscal and monetary, which is Bank Indonesia and Indonesia already done so many years ago. And BIS developing what they call macro financial stability framework, which is Bank Indonesia already implementing. Even my book with Solikin talking about central bank policy mix. This being discussed and developed in this Bulletin of Economic Banking and Monetary Conference. Now, let's go to the future. What will be reshaping our lives now to the future? To my youngster that stick at the back there. Within the next 5-10 years, we'll become forward. I will be retiring after 5 years. Who sitting in the front will probably in Indonesia in the course, just for a while. Waiting for you, the youngster, come forward to lead. What the single things that difference now to the future? Your ability to adapt and adopt digitalization. I repeat again. Your ability to adopt and adapt digitalization, which is now already reshaping our life. Every day, Anika doing ChatGPT, what is called, doing the pantun, the word of Indonesia is pantun, what is, also looking for singing, and some of them also using language AI for writing, which is where we'll be in the future. And Bank Indonesia also using for forecasting, inflation, growth, consumption, even performance measurement. We also is using AI in Bank Indonesia. All in all, digitalization will come from now and even faster to the future. Your cognitive, your intelligentsia will be replaced by AI. What make different? Your behavior, leadership behavior. Just watch movie called Atlas. Anika, Pak Yuki already watched Atlas, a movie? It's good movie. The survival is the one that can change behavior to the future, not being detected by AI. But overall, digitalization has redefined the key driver of our economic activity, financial, through transforming industry, revolutionary of traditional sector, from education, payment, economic, financial, health, and everyday life. Digitalization has increased efficiency and boosting productivity across various sectors through automation, effective data analytics, and digital platform. But also, there are some risks of digitalization. Among them, the need of reskilling and upskilling, the need for regulatory, but beyond that, there is operational risk, particularly cyber attacks. And for individual, behavior change that cannot be replaced by AI, including also be mindful of digital adoption. Every day, you probably spend about 10 hours through digitalization. Addiction becoming a problem. Behavior of stress, depression. This is actually the plus and minus digitalization. The one that survive, the one that can change your behavior, your emotional learning, not your cognitive and intellectual learning, because the cognitive intelligence will be replaced by AI. But emotional learning cannot. Your personal self-control, your behavior, social, and then also how you interact with others. Then in this world of digitalization, and now to the next industrial revolution, which is coming 4.0, digital revolution, what the role of central bank? How the central bank continue to play a key role in this digitalized world? Digital revolution, industry revolution 4.0. I will talk today on the two aspects that central bank already play a key role and will continue play a key role. One, where we already done so far since 2018 and 2019, which is digitalize our economic and financial through digital payment system. Because no activities, whether economic, financial, get away from payment system. Digitalized payment system is the key contribution of central bank to prepare our economic as well as our financial and our generation to the future, adopt digitalization. Number two, which is also Central Bank of Indonesia now already embarking upon, which is to be the first central bank digitalization. Digitalized in the central bank, not only on the policy formulation, implementation, as well as our institution, human resource. I will talk in these two aspects. Let me start with the first. The role of Bank Indonesia in digitalize our economic and financial through digital payment system. When I started my governor 2018, I learned a lot about digital. And in 2019, we issue our blueprint of Indonesian payment system, 2019 to 2025. Guided with 5 visions. One, how our digital payment system can integrate our national economic and financial digitalization so that end-to-end process, money supply process, monetary policy, financial sector, as well as all of the economic and financial payment decision can be integrated. So the role of central bank can still there through digital payment system. The second vision and has been and shall continue how to make the digitalized banking, not digital bank. Digitalized banking to be the core of digital payment system. We cannot have a shadow banking. Digitalized banking should be the core, not digital bank. The banking that digitalized through digital services. The third vision has been also how to interlink the fintech, bank, non-bank, to integrate it to digital banking so that avoid the shadow banking. The fourth vision has been how to promote innovation but still adopting risk mitigation for customer protection, AML, CFT, as well as cyber. And the fifth vision, how to digitalize our national payment system and economic finance so that cross-border payment system still put in the national interest. Less than 5 years, Indonesia has been one of the key players in the digitalization. QR Indonesian standard now almost 50 million being used nationwide. One QR, one also for each transaction. Almost 42 million of these uses are SME for financial inclusion. QR Indonesian standard already cross-border with Malaysia, Singapore, Thailand, and soon will also with other ASEAN countries for retail payment. QR Indonesian standard has been a main for conducting economic and financial transaction. Our retail payment, fast payment, real time, never sleep, 24/7, only very cheap, 2,500 rupiah per transaction, has been used across nation. And in the future, we will also have a cross-border retail payment, with nexus, with other cross-border, as well as also digitalize our social program. Most of our social program being channeled through digitalization. Collaborative works between central bank, the government, and industry. So less than 5 years, Indonesia emerged as one of the key players in the national economic and financial digitization through digital payment system. This week, I will launch the second phase of Indonesia Blueprint Payment System, 2025 and 2030, with the same 5 vision, but focusing on the innovation, industry consolidation, as well as also expanding the cross-border. I will launch the next phase of BSPI, Blueprint Sistem Pembayaran Indonesia 2030, Indonesian Payment System Blueprint 2030. You are among the first that listening to me. With the 4I, 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 and 1 DC, digital currency. 4I, 4I, 1 DC, digital currency. Rupiah digital. The first I is infrastructure. We are building, also modernizing our payment system infrastructure. We are in the process of modernizing and scaling up our retail fast payment, BE fast. And we also invite the private fast payment. Within the next 5 years, will 11 million per day transaction. That catering the need, the retail payment system. We are modernizing our Bank Indonesia fast payment, and we will invite the private fast payment to also being developed and linking to our fast payment. The second infrastructure is modernizing our retail, real-time gross, the wholesale, to be modernized, multi-currency, and cross-border using also ISO 2022. The wholesale payment system infrastructure. Both retail will be cross-border with the Nexus and others. The wholesale real-time cross-level will be also cross-border with the Embridge or Dunbar, which is also being initiated internationally. The wholesale for facilitating trade, investment, corporate financing. The retail is for you guys, the SME. Not only nationally, will be cross-border. The third about infrastructure of the payment data. Straight through from the transaction by customer to bank and non-bank, digitization, and straight through our payment data. And then we will also discuss with industry which data on this payment can be public, whether it's also contractual, whether also privacy. We will discuss with industry and national how to use this data for simulating innovation. So this first AI, infrastructure on the retail payment, infrastructure on the wholesale payment, infrastructure on the data payment. BE fast, Bank Indonesia fast payment, real-time gross settlement. This is the first I, infrastructure. The second I is industrial consolidation. Because under digitalized, we'll be building like a toll road. We want everybody to be on the toll road, but cannot be everybody able to enter the toll road because the technology, risk management, and also human resource not suitable to the toll road. So we consolidate our industry, who are the big player that can go to toll road, but those the big player must also bring along the non-big player. So everybody will be on the toll road. This is industrial consolidation. Two segments of industry, the big player and the smaller player. The big player will be nationwide and cross-border. The smaller player will be brought along by the big player to be on the toll road. Industrial consolidation. This is what we see in Brazil and other countries, because under digitalization, we need everybody to be on board, but the capacity to be on board on digitalization will be varied by industry or player by player. So we will, the second I, industrial consolidation. The third AI, innovation. We are promoting and with industry stimulating innovation. This week, we will announce hackathon of innovation in digitalization. We have been submitted more than 4,000 competitor team. With industry and the government, we have competition of building the startup on three aspects on the innovation. One on the product and services, second on the business process engineering, and the third is on the risk mitigation and cyber. We have more than 4,000 nationwide that have competed on this, and we will select who will be the winner. In this week, this week we are organizing Indonesian Economic and Financial Digital Festival, starting on this Thursday to Sunday in Convention Center. You guys, the youngster, come along. See in the future what will be look like. Digitalized. That's the third I, innovation. Promoting innovation, yet still customer protection, risk management, cyber, as well as also how the youngster can compete to adopt and adapt new way of digitalization and product services, business process engineering, risk mitigation, and cyber. And we will expand to the future to any other innovation that suited for our national economic and financial digitalization. The fourth I is internationalization. We expand our cross-border payment system not only in Asia but also worldwide. As I said, we already have QR, quick response cooperation with Malaysia, Singapore, Thailand. As my TikTok already saying, you can buy durian in Singapore, Penang, or in Dempsey, Singapore, using QR Indonesian standard. Most of Singapore, Malaysian, and Thailand coming to Jakarta, to Bali for retail payment using QR. Their QR being accepted in Indonesia. Soon the ASEAN will be integrated through retail QR and fast payment. As I said, our fast payment will be also cross-border through ASEAN, through Nexus, initiated by BIS. This is integrated internationalized cross-border retail payment, and I see also our real-time cross-sell wholesale will also cross-border cooperation with Embridge and Dunbar for wholesale trade, investment, and other wholesale transaction corporate. This 4I, infrastructure, retail, wholesale data, industrial consolidation, innovation, internationalization, 4I, and 1DC, digital currency. We are in the process of finalizing our proof of concept. Policy-wise already, but we are in the process of choosing with technology supported our digital rupiah, whether centralized or decentralized. How we will need to go to wholesaler, and wholesaler, how this will be licensed or this can be distributed to retail. This is what we are in the process. Digital rupiah to prepare in the future using digital rupiah. So into the future, there is 3 currency that we can use. All of them are rupiah currency. One is paper, like in my wallet. I'm the boomers, but the Zoomer, the Gen Z, they do not have less paper money. I still the old guy, the old person. Bu Miranda probably still use paper money. Pak Iskandar, no. Pak Iskandar still using paper money. The democratic, the senior citizens still using paper money. The type of second currency is account-based currency. That most of us, generation Gen X, why mostly using account-based currency through debit card, electronic money, other aspect. The third is about digital rupiah that we will prepare to the future. So this is the next digitalization that central bank promoting our national economic and financial digitalization. How together we adopt digitalization in our economic and finance. And our digital payment in the next phase with digitalized infrastructure, industry, innovation, cross-border interaction, and also preparing digital currency. The second aspect of our digitalization transformation within central bank. Since last year, within our central bank, we are in the process of digital transformation. I introducing 6 digital transformation within the central bank. 1, digitalize our policy making formulation. Second, digitalizing our policy operational. Third, digitalizing our surveillance. Fourth, digitalizing our institutional. Fifth, digitalizing our human resource. And the sixth, digitalize our technology as well as our modern office. We are in the process preparing the central bank to be integrated central banking digital. We are already in Bank Indonesia digitalize our work process and business process. Just like business process re-engineering, but through digitalization. From 8 step decision making into 4 step. Everything is on the digitalization. From using the statistic econometric using AI now. We are forecasting inflation, lending, consumption, and others using AI. From metadata using supervised learning, and we are in the also process generative learning to forecast our economic and financial variable. Not only processing, but also collaborative works using those on the economic analysis. And also preparing those for board material, straight through to my iPad. So, every time I already have, we call it digitalized economic analysis, straight through. Every time Solikin and team and other team using, I already have in my iPad. And also work collaborative through our board meeting. And press conference and report will also publish to straight through, end to end from input through metadata, also behavioral data, through straight through, collaborative works through board meeting, and also accountability and transparency. Beyond that, this digital transformation business process, not only for policy making, but also performance measurement, KPI, process, efficiency, also governance, and beyond also individual performance of the employees. This digitalized, which is all end to us to integrated digital central banking of Indonesia. That's why we have 3 aspects on this digitalization. making digital as a driver of transformation, building super apps, including also using generative AI, collaborative works, using AI, not only supervised learning, also machine learning and generative AI, straight through process, from input, output, to also accountability and transparency report of the central bank. And beyond that, also how we have to have a decision-making process, governance, and so on. So this is the second aspect that Bank Indonesia as central bank already in the process to adopt and adapt digitalized world. And digitalized to be the first digitalized central banking. So those two aspects that I want to share with you. How you as the participant, you as contributor of the paper, rewriting and making the history through Bulletin of Monetary and Economic and Banking through this international conference. So Dr. Pares and all of the our fellow board member, we will invite more and more paper on the digitalized to be submitted and published through our bulletin, making this bulletin rise again to be international journal, to be also making the history of digitalized world on the economic, finance, as well as also digitalized central banking. With that, let's begin our 18th Bulletin of Monetary, Economic, and Banking, BMEB, International Conference and Call for Paper. May God Almighty always guide us to this journey of digitization for human progress and development progress going to the future. Thank you very much. Have a great conference.
Thank you, Pak. You please remain on the stage for the photo session. May I invite Dr. Yoga Afandi, Professor Pares Narayan, Dr. Albert Park, Professor Ahmad Farouk Aisan, and Bapak Budi Ganda Subrata, Bachelor of Science in MPA, to come on the stage for joining the photo session. Please be ready, sir. On my count, 3, 2, 1. Once more, 3, 2, 1. Thank you, sir. You may return. Okay, once again, please be ready, or the photographer. On my count, 3, 2, 1. Thank you, sir. You may return to your seat. And for the governor, thank you for your presence here. You may continue the agenda. Ladies and gentlemen, distinguished participants, we will begin the plenary session shortly, so please be seated and be ready. The session will be chaired by Professor Pares Narayan, and also we will talk about the topic policy innovation in a turbulent world, embracing digitalization and artificial intelligence amid global uncertainty. There will be 1 hour 45 minutes, continue with the Q&A session. And because the forum is provided for researcher, academic, practitioner, and policymaker, I'm pretty sure you have a note and also want to ask and discuss something about the topic, related to the topic. If we are talking about the topic, policy, innovation in the turbulent world, and also digitalization, it is very relevant today. So we will discuss about the impact of the global trend, what are the challenges, the risk, especially of using AI for the policy making. But before we continue, we would like to invite and also remind you there will be 1 hour 45 minutes plenary session. There will be 1 or maybe 2 Q&A session. We talk about the policy, innovation, and turbulent world embracing digitalization, artificial intelligence amid global uncertainty. Please taking note and also be ready, prepared for the plenary session, also about the discussion. It will discuss about the current issues, of course, strategies, policies related to digital transformation for inclusive and sustainable development. And the impact of the global trend, the challenge, the risk of using AI for policy making. And once again, we also give you time to have a break, maybe for the toilet, because the plenary session will be held shortly for 1 hour 45 minutes with the moderator, Professor Pares Narayan, and with the 3 speakers, Dr. Albert Park from Asian Development Bank, Professor Ahmad Farouk Aisan, dan Bapak Budi Ganda Subrata from Officer GoPay. So please be prepared, be seated, and be ready for the plenary session. And this plenary session will be chaired by Professor Pares Narayan. Before the plenary session starts, please allow me to introduce him. I will read his CV. He is a professor from Monash University, Australia, managing editor of BMEB, named among the top 40 stars of research across all academic disciplines in Australia by the Australian newspaper in September 2019, and recognized as a research leader of the international business field. He is a professor and consultant at the Monash Business School. He is the editor-in-chief of Emerging Market Finance and Trade and managing editor of Bulletin of Monetary Economics and Banking, BMEB. He is also a former co-editor-in-chief of Economic Modeling. Can we start? Okay. So please welcome Professor Pares Narayan.
Ladies and gentlemen, welcome to our parallel session. It's my pleasure to be your moderator this morning. We have 3 very distinguished speakers in this session who are going to share their insights on artificial intelligence and digitalization. I think it is very fitting for me to mention that this is the 7th year that I am moderating this session for the Bulletin of Monetary Economics and Banking. So I've got some historical data to share with you in terms of how these parallel sessions have evolved and how they have impacted the flagship journal of Bank Indonesia. These sessions have been extremely impactful in the growth of BMEB over the years. As I said, we have been doing this for the last 7 years. And the discussions, the themes or the sub-themes that have emerged from our expert speakers have not only helped BMEB as a journal to grow, but has also attracted new research. So I'm very optimistic that with the lineup of speakers we have this morning, They come from not only academia, but also from industry, representing the practitioners as well. So this is the first year where we have made a strategic effort in bringing academic experts as well as industry and practitioner viewpoints to you. As we listen to these expert speakers, something for you to consider is how we convert some of those preliminary, some of those ideas into more impactful research, not only academic research, but how we can convert some of those things for practice and practical impact of those ideas. So that's, and I hope that that your questions that will come later will reflect some of those thinking that we're going to share with you. The way this session is going to work, we have 20 minutes assigned for each of the presenters, and then at the end of the 3 presentations, we'll open for Q&A, and there will be 15 minutes for you to post your questions. It will come up on the screen, and I will read those questions. I will, obviously, as it always happens, we run out of time, so I will try to summarize, maybe combine a few questions so that we are able to get as many responses as possible from our experts. What I'll do next is I will introduce each of the 3 speakers, and then I will request them to join me on the stage. Our first speaker this morning would be Dr. Albert Park. He is a chief economist of the Asian Development Bank and Director General of its Economic Research and Development Impact Department. He serves as the chief spokesperson on economic and development trends and leads the production of ADB's flagship knowledge products and support for regional cooperation fora. He has over 2 decades of experience as a development economist and is well-known expert on the economy of the People's Republic of China. Has worked on a broad range of development issues, including poverty and inequality, intergenerational mobility, microfinance, migration, labor markets, the future of works, and foreign investment. He is also the founding director of HKUST's Institute for Emerging Market Studies and Center for Economic Policy. He has a PhD in applied economics from Stanford University and a bachelor's degree in economics from Harvard University. Please help me welcome Dr. Park. Thank you. Our second speaker will be Professor Ahmed Farouk Ahsan. He is Associate Dean for Research at the Hamad bin Khalifa University and a full Turkish Academy of Sciences member. He has been the board member and Monetary Policy Committee member of the Central Bank of the Republic of Turkey and served as a consultant at various institutions such as the World Bank, the Central Bank of the Republic of Turkey, and Oxford Analytica. He's a recipient of IKAM's Islamic Economics Research Award, FinTech Researcher of the Year Award, Arab FinTech Forum Award, and several other awards. His education, he has a PhD in economics from University of Maryland. Please help me welcome him on stage. Our third distinguished speaker is Mr. Budi Ganda Sobrata. He is a Chief Compliance Officer, Group Head of Regulatory and Public Affairs at GoTo Finance. He has been a driving force behind GoPay's rapid growth as Indonesia's leading electronic money since his appointment as Chief Compliance Officer in 2018. Currently, he also serves as General Secretary for the payment system of the Indonesian FinTech Association 2021 to 2025, as well as the Deputy Head for Digital Economy and Finance Unit in the Indonesian Chamber of Commerce. He holds a Master's in Public Administration, London School of Economics and Political Science, and a BSc from Fontys University of Applied Sciences in the Netherlands. Please help me welcome him on stage.
And Development Impact Department at the Asian Development Bank. We like to see policymakers who really care about research, and I think Bank Indonesia has certainly exemplified the commitment to really supporting high-quality academic research and bringing the lessons from that research to policy. So the topic of our conference today is extremely broad. So I've decided to focus on a few topics, and within each of these topics, I'll be quite selective and won't address every issue, important issue that's related to digitalization and AI. I'm going to take an economy-wide perspective. I think you'll get very good insights into specific issues related to payment systems and banking from the other panelists. I'm going to take a much broader view of how digitalization and AI is affecting how we think about policy and how it's affecting actual development outcomes. So the three topics. First, since this is a research community, I want to talk about how new digital data and AI analytics is supporting the research that we do that informs the design of inclusive policies. I want to talk about how digitalization can affect inclusive development, and then finally say a few words about artificial intelligence impacts on workers and policy responses. So if we think about data and analytics and how it feeds into the policymaking process, we're really at a very exciting moment in history where there's enormous amounts of new digital data sources that allow very precise measurements of concepts that were previously unmeasurable, a lot of granular data not previously available. And there's a lot of innovation going into how to collect such data and process it so it is usable for research. And then, of course, AI and machine learning now for a while have been really gaining traction in use to analyze data to deliver insights into various types of causal relationships and the impacts of different policies. And we're now at a level of sophistication where we also have a lot of real-time monitoring of data-driven evidence that can be accessed extremely quickly to have very fast policy responses. And so all of these different aspects of how data goes to policy are in states of very rapid progress. And so I think as the director of a research department, one of my goals is really to try to just keep up with all of this progress so that from a research standpoint, informing policy, we can do the best job that we can given rapidly evolving technology to deliver insights of value to policymakers in developing countries. Okay, so what are the new digital data sources I'm talking about? This is just an overall schematic. We have satellite data, cell phone data, various applications on cell phones which contain an enormous amount of information about social media interactions, about health, about food, job applications, etc. Then in the new Internet of Things, there's a lot of data now coming from sensors. It could be drones or other sensors put to measure water levels or air pollution that are now becoming more easily available at lower cost. And of course, we have a lot of efforts to digitalize databases. We're doing that at the Asian Development Bank currently. And so these all are really great data opportunities. And then if you think about how we then analyze that data, here is where AI and machine learning really come in, where these tools can help us classify and predict and look at relationships among different types of structured data in a way that we couldn't do as sophisticated before. computer vision and satellite imagery. We're all familiar with natural language processing and text mining with the rise of ChatGPT. And then, of course, other neural network and network analysis can be done using these new analytic methods. So let me give you a few examples of how this type of data and analytics can then be used to look at issues that matter for inclusive development. And my focus today is going to be on thinking about how to use digitalization and AI to promote more equality in development outcomes. So here is an example where we can look at how a typhoon in the Philippines is affecting the fishing sector by using satellite imagery on boat prevalence. And you can see a visual representation on the right-hand figure which shows how the blue dots are boats. And you can see as the red typhoon goes through it, there's a huge reduction in boat activity. So you get a very in real-time sense of how this is affecting the fishery industry. Similarly, and this is an example from Indonesia, the left-hand figure looks at, this is not lights, this is actually mobile phone data, GPS data on density of economic activity with people's phones turned on. And this is a normal day in the previous 24 hours in Ambon Island. And then the right-hand side shows you what happened when there was an earthquake, and you see this big reduction in the economic activity in the areas around the island. So again, we're using digital data to really understand in real time the impact of different shocks to the economy. And finally, similarly, now most ships have automatic identification GPS data that is compiled, and so we can look at the impacts of also major shocks, whether it be on the left, the effect of a volcanic eruption in Tonga, or on the right, the effect of the Ukraine war on port activity in Ukraine. Another example is thinking about how shocks affect agricultural output. And so some of these have macroeconomic implications, obviously, for economies, so should be of relevance even for central bank research departments. And here there are enhanced vegetation index technologies where you can use daytime satellite data to measure the progress of crop. The statistical office certainty about for that training data. You know, what is the actual crop that's being grown and what is the yield level in that field. And that helps us improve the accuracy of our satellite predictions. And finally, thinking about poverty, we've done a poverty mapping exercise in the Philippines where we use a combination of different sources of data, including survey data, but also including satellite imagery data to come up with real-time assessments of poverty levels in different villages in the country. And this data was actually used by the government of Philippines to make decisions about resource allocations to vulnerable communities during. I appreciate that even the earlier slides about agriculture output, about trade activity, all those could be part of a macro monitoring system that gives you a better sense of how the macroeconomy is performing. And we're also developing these tools. So we have had a kind of macroeconomic monitoring tool on our Asian Bond online website. And we are currently in our macroeconomics research department doing work to try to create an early warning macro system that also uses machine learning, so AI, to process lots of available macroeconomic indicators to make predictions about the likelihood of financial or economic crises. And that's what I work with other research departments and central banks on. Okay, now let me say a few words about the digital economy and how it promotes inclusivity. Digitalization, as we all know, is a breakthrough technological innovation. So it has enormous progress for improving productivity and economic development, and also for delivering public goods and services, especially if you think about it, education and health services to remote communities. Digitalization is this great, has this great ability to promote inclusive development by overcoming the remoteness of many poor communities. But the problem is, if we think about who's going to benefit from the digital economy, there's this concern about having a digital divide, and I would say the same for AI. And that emerges mainly because many poor people are just not connected to the internet. And so in the right-hand figure here, you can see that only 42% of people in Asia actually use the mobile internet as of 2020. And so some people don't have coverage, but the bigger problem is even when there's coverage, they're not using the internet. And this could be due to cost regions. Some people call it internet poverty. It's too expensive. It could be to use these technologies effectively. Of course, there are also other issues about thinking about these skill issues that you need some level of digital literacy to really use digital tools to advance economic interest. So this is a really critical issue because we know that the digital economy and digital services trade, for example, is the most dynamic part of global trade now. Even though global trade activity has really fallen slightly or leveled out with all of the geo-fragmentation that's been happening, the importance of digital services trade just continues to go up, even within the context of overall stagnation. And so it's important for all people, all economies to be part of this dynamism. So we've done some studies looking at the preparedness of countries in Asia on whether they have the key kind of institutional setups, market conditions, physical infrastructure, human capital. So there's 8 pillars that go into constructing a digital readiness index for digital, that can support digital entrepreneurship, which is the SME group that we care the most about. And you can see that Singapore has the highest score in the world. Korea's doing great. Malaysia, China, also doing pretty well. But then a lot of other economies in the region are still relatively far behind. So there's this enormous first, to make digitalization inclusive, you have to solve these basic conditions to get people access to these services. Now, what are the different ways in which digital development can actually promote inclusive development? One was discussed at length by the governor about using a digital payment system, giving access to small firms and to households throughout the country. This certainly will promote inclusiveness. So one example that has been gotten a lot of attention is India's digital public infrastructure, because they have developed public service kind of innovations that solve several of the problems that often exclude poor households. Identity issues, verifying your identity, payment systems, and data management. So now if you're a poor, illiterate person in India, you can still get on to the internet. You can verify your identity using biometric markers, and you get a free bank account, and you can even manage other important documents that you have and give access to different service providers all through this DPI. And I won't say more about that because the governor already spelled out a lot of the elements of reforming the payment system to make it more available to SMEs. But I did just want to emphasize again how important digital technology is to create business opportunities for small and medium enterprises. Digitalization overcomes some really high fixed costs that most SMEs often encounter. One is, if you have e-commerce, you don't need to invest in retail space. Huge fixed cost savings. But also, you can reach huge numbers of people. So you solve a lot of marketing information problems, and hopefully, eventually, it'll also be easy for SMEs to trade internationally. So this is why we know that the development of SMEs really contributes to inclusive development because they tend to employ less skilled workers, unlike very large corporations. And this helps reduce inequality. Another aspect which, again, the governor talked about was using central bank digital currencies. But, and this is a great idea for many reasons, but obviously it has to be adopted in a very measured and gradual way to address many of the risks that maybe occur when you put everything in digital form. But I wanted to emphasize some of the ways in which CBDCs could benefit inclusive development, because what it really will do is streamline small value digital transactions. There has been discussion, you know, when, relevant for Indonesia, when migrants leave a country and work in another country and they want to send money back, oftentimes they have to pay huge percentages to the intermediaries, like I think typically like 8% or more. And central bank digital currency, if it can be made to support international payments or transactions, could reduce that substantially. So increase the welfare of migrants and their families. And finally, the last example I want to give about digitalization is what I think is a really neat innovation in how social assistance can be provided to people. This is work that's been piloted by UNDP, and instead of, when there's a disaster, of course this is very relevant to Indonesia, which is subject to many natural disasters. The usual process is that, okay, after a disaster occurs, you have to go out, you have to have someone assess the needs, who needs help, and then you have to plan, okay, how are we going to get the aid to them, and then you have to mobilize the delivery and the payment of those goods, and then by the time the assistance is actually delivered, it's actually usually days, if not weeks, after the event. And so precious opportunity has been lost for really helping people and households at their greatest time of need. And so there is a new innovation called anticipatory cash transfers, where you basically do a lot of preparatory work, and you say, I'm going to give you an example here in a minute. If you say that I know with very high probability that you will be hit by a disaster that's going to really be challenging, and I'm going to automatically, using sensor data to predict, and then using online digital transfer payments, I'm going to give you money before the disaster even hits you, with the bet that this is going to be, it's going to be worth it. Of course, there's some small risk that you won't be affected by a disaster and there's money in your account, but we can minimize that. How? So this is an example from a program in Bangladesh, I believe, where you see the blue line is, one is the actual water flow. So this is to detect flood vulnerability. So the light blue line is the actual water levels, and then the dashed line, which really looks like the same line, is the predicted water flow 5 days before the disaster. And you can see, given the sensor data that they have, they can predict with extreme accuracy what's going to happen 5 days later. And because they know that, if you look at the bars on the x-axis, you see these bars rise. This is where they're transferring money. You see when, let me explain this. See the upper red horizontal line is the trigger for flood damage. That's going to be very damaging. And you can see the point where the blue lines go above it. That's a flood. That's the disaster. And you can see that using this anticipatory cash transfer, they're delivering the funds, the tall blue bar, right when the disaster is occurring, not 2 or 3 days later or a week later. And then the research found that they did a very rigorous impact evaluation study, and they found that delivering this assistance on time has huge, compared to delivering it with a week delay, delivers huge benefits to the household in terms of their asset preservation, in terms of their subjective well-being, in terms of their consumption, all by just being faster in this assistance. And so here you see how great data and digital delivery of assistance can really be beneficial. Okay, I want to say a few words about artificial intelligence and then stop. So how will AI affect employment? The most concern is this top row, which is a displacement effect, that through various types of automation, it's going to put people out of work. But of course, there are beneficial effects that offset this. The most important, of course, is a productivity effect. If AI makes us more productive as a worker, then I'm going to be able to, there's going to be more demand for my services because I can deliver more at cheaper price. And so this could actually increase the demand for employment of people who are now have augmented productivity with AI. There's also the last one in the top section of this figure, the reinstatement effect. That's basically that because AI is around, it's going to create new jobs. They're going to have to be people who are running the AI algorithms or programming it or designing it. Just for computers, we had to have people who manage computer systems, a huge new area of job growth. And so that will also occur. So these are some positive effects that will kind of somewhat offset the displacement effect. The question is, what is going to be the overall effect if you balance these positive and negative effects? And that, of course, we're not sure about. Different economists have made different predictions. Economists tend to be a bit more optimistic about technology because people have always said the next technology is going to put everybody out of work, but we've never seen it actually happen, including digitalization, including computers, et cetera. Now, there are a bunch of policy issues that are important in thinking about managing this process. One is there's certainly going to be an adjustment of work. Some people have estimated that in the 5 years, 23% of the nature of jobs is going to change because of AI. And so people are going to have to reskill and move to new jobs. So that's an adjustment problem for the labor force that the government needs to facilitate and smooth out. There's also this issue that I mentioned with digitalization, which is also true for AI, the mismatch between this technology and the skills. We want as many people in the labor force to have the skills so that they can benefit from AI and not be replaced by AI. And the lingering concern of AI is that this excessive automation, that people are going to be thinking of using AI to just replace people, which is not the right way to think about it. Okay? So let me just give you a few insights into what we know from existing studies about how AI affects employment. There was a very interesting study of business process outsourcing kinds of service activity in, I believe it was the Philippines, where one thing they found is that in terms of resolving the cases from phone calls that were coming in, the resolutions per hour went up after the introduction of the new technology here was giving the workers ChatGPT and instructions on how to use ChatGPT to support their responses. Increased productivity, they were able to resolve more problems per hour. And on the right-hand side, this shows you how it affected productivity of the people who were the lowest performers at the beginning versus the highest performers. And what it found is that the lowest performers it increased their productivity the most. For the highest performers, it didn't increase their productivity at all. There was no effect because they were already so efficient at what they were doing. So within this narrow task, which is a high-skilled task, it equalized outcomes. Okay? It helped the relatively less productive. Now, there's been a lot of research in labor economics now trying to understand how is AI going to affect jobs. The starting point is usually figuring out does AI do so well that it's going to be much better than humans. And these are some of the different tasks that have been identified. And then you can come up with a study. You can say, okay, which occupations, and this is using U.S. Labor Department data, which occupations do tasks that look like those things that AI is really good at? And so I can come up with an occupation exposure variable for different occupations. And that has been done by a number of people. And what do they find? If you look at what occupations and what sectors are affected the most, you actually find, and here in the left-hand figure, the occupations are listed kind of by the level of skill. So the top is managers and professionals, going all the way down to construction workers, farm workers. And you can see that the vulnerability, which is the scale, the exposure levels, is higher for the high-skilled workers than for the low workers. Unlike many other technologies which affected either middle-skilled workers or low-skilled workers, this is going to be most impactful for high-skilled workers. So actually for developing countries that have a scarcity of high-skilled workers, it actually could help them deal with that scarcity by using AI if they don't have enough people to do some of these tasks. And similarly, if you look at sectors, it's the finance sector, the professional services sector. These are going to be affected the most, whereas the retail, trade, construction, transportation are affected the least. There's an IMF study that has gotten a lot of attention where they do a deeper breakdown by looking at labor occupation data from many, many countries around the world. And they have a few interesting findings. So here, the red is the degree of vulnerability, and they break it down in different ways. One thing is that the advanced economies are much more vulnerable than the low-income countries because they have more of these high-skilled jobs. And then females are more exposed to AI than men. And then the third one is that more educated workers are more exposed than less educated workers. Being displaced, then this is a negative thing. But remember, there's also productivity effects. So some people have argued that some of these high-skilled jobs are going to be augmented. Like, let's say we're researchers, and with AI, we're going to be able to produce much better and high quality and more quantity of research articles. So then it could be augmenting for us, even though AI maybe takes care of a lot of tasks that we normally did. So if you take that into account, it may be less obvious that the high-skilled workers will be less affected than. And so I think the research community is still trying to get to grips with how to quantify and measure this kind of augmenting side. Okay, I'm almost done. Whoops. Oh. Okay, so, whoops, that should be fine. What does it mean for policy? I think this is a very interesting kind of essay by Darren Ismoglu, and they've done a lot of work on technology. And what you don't want is AI to put people out of work. What you do want is you would like AI to augment productivity and the quality of service delivery. And so they argue that we shouldn't assume that the market will prevent this negative automation replacement effect, because that tends to be the way we've thought about technology. And a lot of innovation on AI is trying to do that, is trying to think about ways to replace workers. And what we need to do, including in government policy, is think about a better way of learning more tailored to the individual, right? Whether it be primary school or professional development. Also, to deliver healthcare services that are personalized by AI. And then thinking about augmented reality, where having AI allows a worker to really work with technology to be more productive. So just a couple of final thoughts. Digital technologies and AI have this huge potential for promoting inclusive development. I really believe that. The range of digital technologies and AI applications is very vast, obviously, and that makes it very important for governments, ADB, other international, be very strategic and think about what the priorities should be for forward-looking and evidence-based development that can promote more inclusive digital and AI development. Also, I think at ADB this year, we're really focusing on private sector development, and I think empowering the private sector, including the creation of a strong ecosystem for entrepreneurs and small and medium enterprises, is going to be also very important for making this development inclusive. And finally, governments shouldn't just assume that the way technology evolves is out of their control.
It's at the end of the speeches by the other two distinguished guests. So what I would do now is invite Professor Ahmed Hassan and his topic is harnessing digitalization and AI for economic resilience and policy innovation. I think it fits in well from Dr. Park's post, and let's see what you have to share with us. Thank you.
I'd like to first thank to Bank Indonesia. The first time that I came to Indonesia was in 2012. There was an ONFIF event that Bank Indonesia was hosting. And since then I came to Indonesia for several times, and each and every time when I come to Indonesia, first of all, the hospitality is always great. The people, the sincerity, and also the development over time. Really, I mean, it's about now 12 years, but I see a big change in Indonesia, and I would like to congratulate the central bank, Indonesians, for that success. And one good example is the BMEB journal, actually. I kindly, when I came first back in 2012, we were discussing about the macroprudential policies, it was just after 2008 crisis, and we were trying to find some measures just to run the economy, right? But now, it's 12 years later, we are discussing a technology. And at the time that we were discussing about the global crisis, it was about how to overcome and not to face the same crisis again. And it was mostly because of our mistakes, because of our policies that we were discussing. But right now, we are discussing AI, fintech, and these are mostly about the technology. Technology is, in a way, more of an outsider change, which comes out of us. But certain technology is also endogenous, all these endogenous growth models and so on. But at the end of the day, oftentimes, especially for AI-related changes, as being in a developing country also, we are mostly observant. But the good thing is that at least we are, and it gives kind of an uncertainty in that regard. I mean, we are discussing things that is in making still. Many of the things are in the experimental stages. And we know that there will be even more coming. It is just the initial signs. So that sort of uncertainty by itself is quite important. And that's why I really like to thank the conference organizers for choosing such a topic to be top on the agenda, because I believe that now this is the 18th conference, and the journal is coming out. There are lots of good papers coming out, and this will be the subject of AI. Some AI tools will capture this data and then will write a policy about what the Bank Indonesia has led for certain discussions. And we will be, that's why actually it's good to choose such sort of topics. And I'm sure that always the Bank Indonesia will be remembered with the very popular topic, very timely topic, as Governor Perry has rightly mentioned. So I'm very happy to be part of this. So my talk is on the digitalization from the resilience and innovation perspective. I will give my thoughts mostly on central banking. Thanks to Dr. We had very good examples earlier on, but my talk will be mostly on finance and especially on central banking, how the AI will be affecting the central banking. And I would like to stick to resilience and innovation, because this is kind of a continuous debate. So that's why I want to start with some observations. First of all, even the AI is relatively new to us, right? Most of us start learning about the AI because of ChatGPT, right? All of a sudden ChatGPT came and said, okay, there's something going on here. Certainly, we know about AI, and AI is coming. It was in the agenda of many universities, many policies. But for the regular individuals, the AI is mostly ChatGPT. Certainly, we know that it is not in practice. In reality, we are using AI a lot. But in our daily lives, it is mostly ChatGPT. And also, we have been discussing all this Industry 4.0 automation and so on. It has been with us. It was one of the earlier topics of BMEB conferences. It was also very quite timely. And AI is not gonna go away. It is not kind of a, I guess we are all certain that it is not a kind of a hype. Certainly we discuss AI, but AI is something also in making. It is not like, for example, blockchain. Blockchain came, it is still there, but it was more on the ideas. But AI is right now more in the implementation. Most of the blockchain discussion was on theory, but in the application there were lots of difficulties because it's difficult to implement. But AI is not like that, because immediately you get the return. As a financial supervisor, as a bank, as any sort of institution, you can immediately get the return. So that's why AI will remain with us. And as Governor Perry has also rightly mentioned about the movie Atlas, I didn't watch the movie as well, but in the past I used to don't like futuristic movies. It was looking like it is too far in the future. But right now, look at the most recent movies, Hollywood movies, even the movies coming from the developing countries. We start having more futuristic movies. And these movies, look at the bestsellers, for example. books, movies, we start to be more concerned about the future because we know less about the future. In the past, we think that we know about the future more because the life was more stable, it was, the changes were much less frequent. But right now, even the very established companies, even the very established institutions are feeling the danger. For example, if you live in the past and if you happen to be work for a bank, you know that you might retire from the bank and that's it. But right now, even the employment challenge coming from AI, coming from fintech companies could be quite challenging. So people in their midlives can be even very much concerned about what the future will hold. And that is probably the reason why the futuristic movies are more in demand. So my topic is about the resilience and innovation. And resilience is more of a continuity, right? I mean, we want to continue our steady state. This is the human nature. But at the same time, the change is coming. And the change is coming from the technological change, something that we don't necessarily completely control. And as has been mentioned rightly, there's a big challenge from AI on employment, for example. There will be one way or another replacement. It may probably increase the productivity and so on, but AI, what the AI might bring, not now, today, but even in the future, brings another tension, which is about employment, about growth, and even about financial stability from the central bank's perspective, because all the banks will be digitalized, and we have the case of Silicon Valley Bank collapse, where it is even much more difficult to supervise the digital banks. And also there are different layers of uncertainty. One is at the macro level, like it is mostly mentioned, about the competitiveness of the country, right? If the countries do not adapt with digitalization, even it affects the competitiveness of the country, not just the employment within the country, but even in trade, how the country will survive. And that is one of the biggest competition between China and US, right? It is not just about trade issues. It is mostly about how to use the AI. Look at this chip production, for example, the digital chips. The basis of AI is somewhat goes back to some fundamental technology, and this NVIDIA is producing chips, and the US is not allowing many of the chips to be sold to China, even through the other countries. Or imagine the founder of the ChatGPT, he is trying to raise $7 trillion. And the $7 trillion is not to run the ChatGPT, it is to produce microchips that will facilitate to make this AI process even faster. And this is quite a macro risk from the competitiveness side for all the countries. And imagine, it is a $7 trillion of funds that he's trying to raise, and it is much higher than the many countries' GDPs. And this is a big challenge, especially for developing countries, because the technology is right now mainly developed by more developed countries. Also, even at the micro level, we have even questions, right? I mean, how are we going to distinguish the humans and the AIs later on? How are we going to distinguish the robots later on, which is certainly not an immediate question, but it is one way or other will come at some point. And if you look at this Yuval Harari's books, I mean, he started with the Homo sapiens and then Homo Deus, with more about the future. Now he is all talking about the AI. His prediction is quite blurry that the human species might even disappear. So this brings us to something that we are not very much used to, which is about to study the future. Studying future is not something as academics we are used to, right? We are mostly, one way or another, relying on the data, and this data is mostly coming from the past, or the data is actually happening right now. But methodologically, it is very difficult to predict the future, because we have future tellers, we have some speculators, but we have to do this predictions about the future methodologically sound. And really, we don't know this. This is a new field developing. If you look at the journals, there are lots of journals now coming about the future and how to do this future predictions. It is not just a prediction econometrically, just a couple of days later, but what is going to happen 10 years from now, 20 years from now, 50 years from now. And this has to be done methodologically, consistently, and this is something as academics we are lacking, and we have to improve on this, which is very difficult because this is all kind of against this enlightenment idea and so on, because this requires some sort of hunch, this requires some sort of reasoning, but the reasoning has to be an educated reasoning. Reasoning has to come with the also emotional reasoning even to a certain, but it's a growing field in economics, in finance, in social sciences in general. But economists, you know, our academics oftentimes are criticized as being people who are just post-fact. We explain the things after things happens. But now it is the time probably to be more of to do more futuristic studies where we try to predict the things, we try to contemplate and even to shape them, to design the future. It is, if you look at the most recent research, for example, we emphasize more impact-based research. As researchers, we are not just observant, we are not just analyzing. We are also trying to build the future. We are trying to impact the future. So this sort of work is increasing. So how we can do this? I mean, some of the people say that, okay, we are not going to do this sort of futuristic thing, it's not scientific. But I disagree because we already study what we study very well. I mean, the economics and really in all social sciences, we know how to study the past, even the current circumstances. But we know relatively little about how to study the future, but this is doable. But how to do this? I try a couple of studies. I believe we have to find some resemblance that might mimic the future. We had, for example, one study about what happens if we have stateless society and how the national stock exchanges may run under not having states. And the cryptocurrencies are a very good example. Or for example, I have been doing cryptocurrency research, not because I necessarily wanted to work on, but cryptocurrency research tell us a lot about the central banking, about the nature of money. So this is part of the futuristic research, right? Because in real life, you cannot remove the states, but you can find something which in a different setup, but in a similar setup, in a sense, that the state do not exist. States do not exist. And it is a cryptocurrency world. And in the cryptocurrency world, we have cryptocurrency exchanges. And we wrote one paper about the survival of the fittest, that the cryptocurrency exchanges operate without the state, and over time some of the cryptocurrency exchanges will fail. And the survivors, the stronger ones, will even be more strong, will be even stronger. This is one example. Or about the climate change. We all discussed that there's a climate change, one way or another, but we don't know the impacts. But in certain regions of the world, we know that the climate has changed much faster than the other places. So we can analyze what happened in that regions from the development perspective. For example, this is another example how we can study the future. But in any case, to predict the future is difficult, but we have to spend more time and more effort to do this methodologically. And I believe we will see more of this in the upcoming years in academia, not from the forecasting and so on, but from the more methodologically predicting the medium and the long run. So I will try to do now how the AI might affect the central banking. So again, there are already certain things, as Governor Perry, for example, has mentioned how the AI will be affecting central banking. We have seen some elements of this, but how it will affect 10 years, 20 years, 50 years from now is even a bigger question. So in that sense, I will try to do my futuristic study and how the things might come out. So let me try. I asked ChatGPT, for example, what are the AI applications in fintech? I just asked the ChatGPT to give the titles. And all these areas like fraud detection, credit scoring, algorithmic trading, personalized financial advice, you see regulatory tech, sub-tech, everything is there in giving the loans, analyzing the depositors. AI can be used in every financial transactions or in every part of finance. And the banks are already using this. Banks are already using this. This makes the central bank to use it as well, because the central banks cannot stay behind the curve, stay behind the knowledge, because the central banks are supervising, regulating, we should know how they are operating. So we should know AI. And the banks, financial institutions, fintechs are heavily using this for sure, and the application is everywhere. And especially technology is about, it comes to finance first. I mean, there are development implications as we have seen in the previous presentation, but I believe the starting point should be mostly from the banking, because this is where the money is. So oftentimes technology comes where the money is and try to make best use of it. That's why initially, for example, the ATMs and so on have been first used in the banking, and then now for any AI applications in economics and finance, the banking will be there, and there is money for this. And that's why central banks should follow. The best example for this also about the central bank digital currencies, right? As Governor Perry has mentioned about the three types of money, right? One is the cash, one is the account money, another one is kind of the CBDCs. The e-rupiah is a CBDC, right? There will be cross-border, there will be wholesale, retail CBDC and so on. But what does CBDC really mean? That's why it was also one of the topic, and Governor Perry made two very nice presentations in the previous conferences. It has been published in the BMEB journals, thanks to Parash also. He's very much on time in finding these right topics. What does the CBDC really bring? It is about it might be about first about the regulation, right? Because at the end of the day, one of the main functions of the central banks is about to supervise the banks, supervise the financial institutions, and also to regulate them. And the CBDCs will bring lots of data for this, because everything will be recorded. Every transaction, as mentioned, in a single day, it is expected that in Indonesia, as Governor Perez said, 11 million, right, transactions per day. It means lots of data. Right now, when it is in cash, you don't necessarily record them. But when this third currency come, like e-rupiah, the CBDC, everything will be recorded, and you can make analysis based on this. You can analyze how the economic activity is taking place, how the economic activity is doing on that particular day, on that particular moment, on that particular hour, right? It will be possible. And then you can take early actions for this. And this is mainly for central banking, right? Because central banking is, you know, there are four functions of money, one way or other. The fourth one is not always accepted, but the fourth one is the main one, which is the monetary policy making. Through the money, you do the monetary policy making. And with the CBDCs, you start having lots of tools for this. And why we will have lots of tools? Because we will have the data of everyone, data of all the firms, data of all the customers. And let's go back to the central banking in general. We used to think, I put my slides from 2012, by the way, to this, I found it. We have, this is the next slide. When I was at the Central Bank of Turkey, I used to like this slides a lot, and I probably used this in the about 12 years ago in here. And the idea is there are two main objectives of central bank. One is the price stability and finance stability. But this is pretty much agreed. Some of the central banks are more focusing on employment growth, but this is like when you reach the price stability and financial stability, then you reach the growth and you reach the employment. So there is no inconsistency there. But in terms of instruments, even when I was presenting this back in 2012, it was about how the central banks increase their policy instruments. Because in the past, it's as if the only policy instrument is about interest rate. But 2008 crisis show us that there are lots of policy instruments that we can use. We can have macroprudential policies for corporations. We can have macroprudential policies for the consumers. But this brings us the issue of data. When we have the big data, when we collect all this data through the CBDCs, for example, when everything is recorded, that means that we have lots of instruments for the consumers and firms. For example, even to the extent that if an individual is borrowing more than or even spending more than the individual should, probably the central bank can send a signal. Okay, you exceed your budget, you have to be more careful. Right now it is not possible, or it is more difficult. But imagine when everything is done through the CBDCs, the AI tools will automatically direct the individuals. Same thing for the firms. And the more data you have, it allows us to have a bigger space of policy instruments in policy making. This is good and bad because same thing for fintech, right? Also there is this sort of a trend. In the fintech, it is again the finance, but it is more individualized finance. Think about the wealth tech companies. I mean, there is instead of people putting their deposits into the banks, they will put more into the wealth tech companies because everything is now done through the APIs. And these mobile applications will be easier thanks to the technology. Same thing when all this data is recorded, it will give much bigger room to the central banks to maneuver, much bigger room to use different policy instruments. But is it good or bad? The next question is okay, for example, these are the macroprudential tools that central banks can use for the firm level and for the consumers. And in all these dimensions, the big data will help, but the central banks have to be equipped accordingly. One good example here can be given from the Silicon Valley Bank. We wrote one paper about it. You know, Silicon Valley Bank, in just half an hour, they lost about $45 billion. All of a sudden, depositors withdraw $45 billion. In the past, it was not possible, right? Because in order to withdraw in the bank run case, you have to go to the bank branch, you will get into the queue, so there will be a transaction cost. And this transaction cost is good for the regulators in times of crisis, in terms of the bank runs. But when everything becomes digital, like in the case of Silicon Valley Bank, they immediately, in half an hour, $45 billion. Can you imagine? And then you know how the chain works. And then they had to sell automatically, probably they automated this anyway. They had to sell their government bonds, and all of a sudden they realized that they collapsed. But the problem there, from the central bank perspective, Federal Reserve was also late because Federal Reserve was not prepared for this. I mean, a bank in California and the Federal Reserve just under normal circumstances even learned this a couple of weeks later. I mean, learned this immediately because of the urgent need of the bank. But in terms of the regulation, if we had the central bank digital currencies and the Federal Reserve had the mechanism to monitor this, Federal Reserve will inject the liquidity much faster. Federal Reserve will act much quickly. But what happened? Things happen and then they clean up. But in the future, this will not be possible. In the future, all the banks will be digital. People, and even imagine the central bank digital currencies. The banks will not compete among each other. Something will happen in one of the countries, and then even the regular individuals may prefer to transfer their money to other countries. When there is cross-border CBDCs, it will be possible. So let me finish with the issue. This is my last slide. I'm already out of time. But this AI brings lots of opportunities, but at the same time it poses lots of challenges. First of all, we might be over-relying to AI, right? Right now, we have Monetary Policy Committee. At the end of the day, central bank is accountable for inflation, for financial stability. But if Silicon Valley sort of collapse or some sort of financial crisis happen, and you know, we still don't know how to predict the future crisis, right? Because crises are kind of unknown sort of unknowns. It is not like we solve everything. In next crisis probably something that we will not know. Otherwise it will not be a crisis. Probably we will take earlier actions. But imagine we rely too much on AI. Who is going to be responsible? Now we have this discussion in the self-driving cars, right? If the self-driving cars hit someone and kill, who is responsible? This is a big issue. Same thing, if we over-rely on the macro-prudential policies for the firms, for the individuals, and there are some mistakes. For example, some individuals are discriminated, or because of the AI tools, some individuals are not fairly treated. Who is going to be responsible for this? For financial inclusion, central bank is responsible. Right now, you can do this at the macro level. But what happens if some of the people's accounts are blocked and that person cannot even survive? This is a big challenge. Even at the very macro level, we have to think about these issues. And I believe we are just at the beginning of the game in terms of AI and its application. And the central bank should be very well prepared. And I'm very happy today to observe Governor Perry's presentation, to listen. It's good that Bank Indonesia seem to be quite prepared for this. Thank you very much.
Thank you very much, Professor Ahmed Ahsan, for a very illuminating presentation. So I think the stage is set now for us to listen from a practitioner. We have heard from an academic, and of course, Dr. Park is also an academic, but working very heavily in the policy space. So it was very, I think the dynamics of the issues related to AI and digitalization and the type of challenges and of course opportunities they offer, there's two sides of the story. So I think the stage is set for us to welcome the talk from Mr. Budi Gandaswabrata. Thank you, and the floor is yours.
Thank you. Good morning, ladies and gentlemen. If you don't mind, I'd like to stand. I realize I move a lot when I speak, so rather than sitting down and fidgeting a lot. So thank you. I think for me, this is the first time I'm speaking at this event, so thank you for the opportunity for Bank Indonesia. I will promise you two things when I speak. The first promise is I will end this presentation with a picture of Chewbacca and Han Solo from Star Wars. And the second promise, I promise you it will make sense by the end of this presentation. So I will start my presentation today. I mean, the topic is very broad, as Dr. Albert earlier said. So we at GoTo, we try to implement artificial intelligence. So I think today's topic is really on how AI has been implemented in our company, and also a bit of theoretical background in terms of AI policy and growth. So in terms of the agenda, there's basically 4 main sections in the presentation today. It's good probably to set a bit of context, who GoTo is, GoTo Financial, what we do, what data do we have, what business do we run. And the second part is really on AI's impact on business and growth. The third one is the real use cases on GoTo Financial AI examples that we have developed over the past few years. And lastly, some of the policy challenges and conclusions that we have today. So if you're in Indonesia, and if you're Indonesian, if you have lived in Indonesia, you might know who GoTo is. GoTo is a platform that combines on-demand services, so things with mobility, Gojek, GoRide, food delivery, as well as logistics. And then we have GoTo Financial, which is the payments and financial services. So we have e-money, e-wallet, pay later, cash loan, working capital loan for MSMEs. And we also have e-commerce platform in the form of Tokopedia. So we are actually unique because we're actually Southeast Asia's first platform that combines on-demand services, payments, financial services, as well as e-commerce marketplace. So if you see today, right, Goto has 3 main business units. The on-demand services is Gojek. I work in Goto Financial, where we mainly focus on payments and financial services. And then if you see why the dotted line, because late last year we've joined forces with ByteDance and TikTok, where now TikTok or ByteDance owns 75% of Tokopedia. So they're the e-commerce platforms. And because of TikTok, they're now also embarking in more of a social commerce and e-commerce platform to the mass market segment. So this is where we are. So as you can see, Goto is your go-to ecosystem for your daily needs, no pun intended. But if you see that the idea is how can our platform serve your daily needs, both on the merchant side as well as the consumer side. So if you have been a user of Goto, you know that every day you might use GoRide or GoCar for your daily commute. You might use GoPay to scan Keris, which is our interoperable QR payment system in Indonesia, to scan QR to buy your coffee or lunch. You may use GoFood for your food delivery, and then you might buy something from Tokopedia. You may pay your bills, your phone bills, phone credits, etc. But also on the merchant side, you see Tokopedia helps you with inventory management. You can do payouts. You can apply for working capital loan. So essentially what you see here, over the past few years, we have collected a vast amount of data in our platform, both on the consumer side, on the merchant side. And again, today we're talking about AI, we know that data is actually crucial in order for the quote-unquote artificial intelligence to have a training data sets for it to learn and also to make decisions in the future. So if we talk about Goto Financial today, we have a lot of services. From the consumer side payments, we have the GoPay app. We also have the e-money service solution. We have the e-wallet. We also have a collaboration with the digital bank, Bank Jago. On the consumer lending side, we have a buy now, pay later product, GoPay Later. We have personal cash loan, that's the GoPay Pinjam product. We also have vehicle financing for our driver partners in Gojek. On the merchant services app, we have the merchant app, which is like a small app that we recently launched to help MSMEs to accept digital payments, but also in the future to manage their inventory, including apply for working capital loan. We have merchant loans, payment gateway, point of sales, and also on data products. This is where it gets fun on artificial intelligence. We have developed AI algorithm to improve KYC activities, fraud detection, credit scoring, liveness check in order to detect deep fakes, as well as identity theft, as well as demand generation engine. So because we believe that digital payments is the entry point towards more financial services, products, and in turn this will also increase financial inclusion. So this is why I think if we talk about the context of digital payments and AI also in the future, the more data that we gathered, the more these merchants and consumers are acquired, then we will be able to provide them better solutions and better services as well. So with that, I'm going to talk about AI's impact on business and growth. But first, a little bit of pop culture quiz. What's the title of a second Star Wars movie, if I may ask? Anybody knows? No? Not much of a Star Wars fan? Sorry? Return of the Jedi is actually the third one or the sixth one, depending if you include the prequel or not. So some might say it's the Attack of the Clones, which is, if you're a prequel fan, which is released in 1999. I see someone says no. Some might say it's actually The Empire Strikes Back. Close. It's not The Empire Strikes Back. In fact, the second Star Wars movie, it's actually Star Wars Holiday Special, which was released in 1978, right? 1977 was the first Star Wars. Empire Strikes Back was 1980. Star Wars Holiday Special is actually like a one-off holiday special that were released in 1978. Why do I say this? Why is it relevant in our conversation today about AI, right? Because in Star Wars Holiday Special, Han Solo actually meets Chewbacca's family, right? And if you see Chewbacca's family, right, you see on the left-hand side there's this little Chewbacca, I think the son of the daughter of the Chewbacca. And then people were asking, like, what's the name of the species? Is it a Wookiee? Is it an Ewok? I say it's not an Ewok. Ewok is actually part of the third movie, which is like the smaller species. We don't know what's the name. but I call it a WUKIT. Why is it a WUKIT? And this is a framework that I got from Joe Twyman, who's the founder of YouGov, and I got it when he was a guest lecturer in LSE, and I find it so interesting, right? So I'm not taking any credit. But why WUKIT? WUKIT is a framework. Basically, when you have data, raw data, that is not enough. But how do you want to utilize that raw data to become a wisdom, which eventually becomes, your artificial intelligence? Because raw data is just data, right? You cannot do anything about it. Eventually, it becomes information. From that information, it becomes knowledge. When you get that knowledge, then you have an understanding of your business, right? And then eventually, you elevate it into wisdom, right? Because understanding your business is not enough. Wisdom is knowing what to do with it, right? i.e., what actions to take in order to achieve a specific business or economic outcomes. And that's the whole point, right? And then if you see the abbreviation of WUKIT is wisdom, understanding, knowledge, information or insights, and then data. So, which is a nice segue in Goto, how do we do it, right? How do we transform data into useful information, which eventually becomes a wisdom or an actionable items to achieve a specific business or economic outcome? We have a holistic view of the consumer data in use cases such as transaction in payments, on-demand data, so food delivery, geographical locations, what have you. We have data on payments and financial services, so GoPay data, GoPay later data, GoPay Pinjam data. We also have data in terms of user demographics, so we do acquire user when they onboard, so we have information such as age, location, occupation, and other demographic data. And we also have thousands of data group which segments basically consumers, merchants, and transaction. And this data, we basically do a comprehensive analysis which eventually provides who, so contact information, demographic profile, the type of occupation, income verification. For example, let's say if you claim that you are a blue-collar worker, and then we saw from your commute information that you're traveling, let's say, from southern part of Jakarta to the CBD area in SCBD or in Tamrin or Sudirman, for example, in a way that acts also as a proxy that you are a blue-collar worker or a white-collar worker, sorry. The purchasing power, proxy on socio-economic status, credit card that is linked, the first 6 digits of credit card actually gives you insights whether your credit card is actually gold, silver, or platinum. We can also see from your geographical location where you live. So for example, if you live in Menteng area, if you live in Pondok Indah area, there's it's a certain proxy of socio-economic status of that particular user. GPS location, cross-check on delivery address, commuting patterns, that's also information that we gather. We know about spending patterns, people tend to spend more at the end of the month or the beginning of the month because of their salary cycle, but also in terms of income stability. So what happens if there are shocks? So let's say if it's a farmer, you see shocks in terms of seasonalities and what have you, that can also be validated. And lastly, how? What device do you have? Is it an Android? Is it an iOS? You have device ID, app usage patterns, preferred payment methods. If you use a credit card or if you use a pay later at the end of the month, you know that people normally tend to use pay later, well, in the middle of the month before the salary cycle comes in. So you know how these payment methods or these solutions are being used. This will result in a market-leading competitive advantage. So we develop our own anti-fraud model, so we know the user profile, but also an efficient user acquisition to make sure that if we create a credit score for our financing or lending solution, this also helps in automation of the onboarding process itself. Now, rather than showing just our picture, this is also like a graph. I mean, I'm sure for you academics out there, this is the Solo Swan model. And you see that, capital, labor accumulation. But what is important is it talks also about technology advancement. And why is it important? Why AI is important? AI will be important because it's actually going to be one of the biggest factors in order to increase productivity, which in turn is also increase growth. I don't want to dwell too much about this because I know I have a much more distinguished speakers, more academic, qualified, to talk more and better about this. So I'm just going to skip this a little bit. So when when I was asked to talk about how AI can contribute to economic growth, I did what any logical person would do. I asked ChatGPT, and this is the answer that it come up with, right? But it's all good answer, right? How does AI contribute to economic growth? Obviously, we spoke about how it increases productivity, right? Because it can automate a lot of tasks like mundane work so that people can also, it can shift humans to work on more substantive work rather than mundane and repetitive tasks. We also talk about cost reduction. There also improved decision making, so credit scoring, risk management, increased monitoring capabilities as well. It can help on supply chain optimization, which in turn can also help increase output and production. AI can also help financial services in terms of fraud mitigation, risk assessment, and also algorithmic trading. And also we've spoken about healthcare advancements as well, how early disease detection based on patterns, based on predictions, personalized treatment plans, and efficient management of healthcare resources. So these are some of the ways how AI can contribute to economic growth. And there's this beautiful paper by Philippe Aghion, Benjamin Jones, and Charles Jones from 2017, which basically talks about AI and economic growth. But one thing, or at least some of the key insights from that paper is that we've spoken about there's the cost disease insight, where growth might be constrained not by what we are good at, rather but what is essential but yet hard to improve. Because economic growth may be limited not by an advancements in area where productivity is already high, but by essential sectors where improvement is more challenging. This indicates while AI can drive significant productivity gains, its overall impact on economic growth will depend on how it addresses these harder to improve areas. Which is a nice segue to my next section. What are the harder to improve areas and what are the things that we try to improve within GoTo Financial? So these are some of the examples of GoTo Financial's AI's implementation. The first use case is obviously we want to increase financial inclusion, and we realize that actually in order to be financially included, you need to be onboarded into certain payments and financial services features and product. And we realize, especially for a lot of people, the drop-off rate is very high. So how do we improve? We try with a very specific question. How can we utilize data and AI to improve user onboarding on banking and financial services? So as you can see here, these are some of the real screenshot in the GoPay app when you first onboard to be registered as a KYC user, but also if you're onboarded to apply for a cash loan or even onboarded to our digital banking product by Bank Jago. We have an automated face detection, which actually helps prevent identity theft and fraud. We also have an OCR. If you see on the left-hand side, when you take a picture of your ID card, our OCR, which is developed in-house, has 99.4% accuracy. It can detect from a broken ID card, whose texts are a bit smudged. Certain fuzzy logics may predict what are the texts that are within that ID card. And also, it can also detect fake ID cards as well. And we have liveness detection to ensure that when you take a selfie, it is indeed you are you. It's not someone who's deep fake with a deep fake injection, or even using a printed mask in order to basically do identity theft, right? We also have access to the Dukcapil data, which is the Ministry of Homeland Affairs. So these validates and verify the user's identity, and it also prevents fraudulent user. The impact, as you can see, we see a massive improvement in the drop-off, right? So you can see that the improvement in drop-off is actually roughly around 40%. It reduces friction in the onboarding process, which in turn, if you look at it at a more macro level, it increases inclusion, especially towards the underbanked and the unbanked segment. And of course, because of the fraud detection and fraud prevention, it also it contributes to the loss prevention to the business as well. So these are some of the implementation, real-world implementation of AI in GoTo Financial. How does it work? So, it's a pity that the GIF doesn't work. But the idea is the screenshot, actually the picture should show someone takes a printed face and then put it in front of his face and then use the app to try to bypass the liveness detection. It failed. Why? Because we also have a detection to enable that we will be able to detect deepfakes injection into the system as well. We also have a system which utilizes a technology what we call Aurora Guard. So it will be able to detect whether there's a 3D face in front of you rather than just a 2D face. And this is utilized by using lights, different lights. So we have green, blue, and yellow. Why? Because it actually have different wavelengths. And different wavelengths, if it reflects back to the camera, it will be able to detect the level of depth. So these are some of the ways of how we will be able to detect deepfakes as well as to ensure that real humans are indeed in front of the camera during user onboarding itself. The next use case is how do we enable more inclusions to the unbanked and underbanked through better and smarter credit scoring. So as I said, we do have raw data from mobility, food delivery, payments, salary and investments. We also have behavioral data, transaction patterns. We can see certain outliers or shocks that may be experienced by the user itself. We also see repayment habits. So do certain users repay on time or a bit late? Let's say if Budi repays normally on time or 2 days in advance, but suddenly 1 month he repays like 3 months or 3 days late, perhaps there's a shock over there. But this helps us to give more insights so that we will be able to improve risk scoring, and in turn it will also improve users' eligibility to our payments and financial services product. And the third one, again, I don't think the video is working here. The third one is actually a split bill. Again, this is more of a convenience factor. It doesn't really contribute, let's say, to the business, but it's a convenience factor. What you can do today with the GoPay app, we also implement OCR, where today you can scan your receipt. It will immediately obtain the line items of the prices, and then you can do also split bill with your friends as well. Again, this is part of the use case, which is more of a convenience factor. But we don't stop there, right? Again, what we have done also, we try to do more research, more collaboration with external parties, with association, with academic institution as well. Today, we actually have an ongoing research with the Laboratory of Economics and Analysis Design with MIT. Some of the topics that we are doing is on digital safety net and risk sharing, improvement on MSME working capital loan. We also look at weather index insurance, how publicly available data can help us predict seasonalities, and then you cross-reference it with our MSME data in terms of transactions, incomes, as well as expenses, but also gender roles and household income, right? We have users' data, but some users in Indonesia, normally they are also entrepreneurs. They also work in an MSME. They also own a business. So we will be able to see and also predict some of these behaviors, which in turn help in some of the product improvements that we do as well. Right? If you want to know more about the research, actually, it just so happened that the principal investigator, Professor Rob, is also here in town. So feel free to talk with me and also with Professor Rob if you want to know more about it. So on to my last section, policy challenges and conclusion. I'm not going to go deep dive more about it because I think Professor Ahmed has mentioned about it, Dr. Albert has mentioned about it. But what are some of the growth factors of AI, right? So obviously, in the past few years, we see more computer powers advancements. We see more big data availability. We see more improved algorithm, but also multi-sector application. So you see AI is being implemented not only in the real sector, right? It can be healthcare, retail, commerce, as well as payments and financial services as well. But it also comes with certain ethical and policy concerns around AI, namely bias, transparency, and fairness. How can we make sure that AI doesn't make biased decisions based on biased data sets? So these are the things that some of the ethical implications and also ethical concerns with regards to AI. What about job displacements? Dr. Albert and Professor Ahmed also mentioned a bit about it. Because of more automation, will result in job displacement in some of the more mundane and manual work as well. What about economic inequality? There will be more players, more businesses which have more AI capability. There will be more nations which will have more advancement in AI. This will lead to greater concentration of wealth and power as well to these businesses or even these nations. What about security risk? AI can be used maliciously. Like in the prehistoric times when people discover fire, you can either use it to cook or you can either use it to burn. There are positive impact, but are also negative impact on AI. Deepfakes, we see misinformation in the build-up of election, and other malicious intent that is being utilized to use AI. What about data privacy and security? Because a lot of AI data also rely on personal data and personal information. So there are also concerns about what if my picture is being used for AI? What if my personal address, personal phone numbers, and personal contacts are being used for AI? And lastly, the regulatory challenges, because with the rapid pace of technology advancements of AI, policymakers need to balance the needs to encourage innovation, but at the same time, how do we protect public interest as well as safety? I'm keeping my promise. I'm ending the presentation with a picture of a Chewbacca, but I hope I also make my second promise true, which will basically make sense of it all. So to conclude, I think we know that data is important. Data alone is not enough. You need to be able to extract information. You need to have knowledge. You need to have an understanding. But importantly, you need to have the wisdom in order to be able to do the right action in order to achieve your desired economic or even business outcome. And hopefully AI will help us to do that. Thank you very much.
Thank you, Pak Budi. That was very